Before we begin, a disclaimer: this podcast is for informational and entertainment purposes only and should not be relied upon as the basis for any investment decision. Nothing you hear is an offer or solicitation to buy or sell any security. The securities discussed on this podcast may be owned by persons being interviewed. Before making any investment decision, please consult an investment advisor.
Yeah, you don't really often come across software companies that are like 40 plus years old, right? So Adobe is one of those companies. It was founded in 1982. So almost 43 years now. And so we know Adobe for, Illustrators, Photoshops, Adobe Premiere, PDF, but they actually started with this product called PostScript, which is basically a device independent programming language between PC and printer that could describe text, graphics, and images on one page. Like back then, that was like a revolutionary thing. And with Apple was actually one of the early investors of Adobe. They used to own like 15% of Adobe back in the day. They eventually sold in 1989. But yeah, so that in the 80s, they started with PostScript. And they started growing really fast. Like they found their product market fit like right away. And in the first 6 years or so, they grew triple digit every single year. And what really, struck me when I was kind of going back and reading the history of Adobe, like the first decade, I would say, this company was like kind of brimming with like, innovative products that we still use today. So like, for example, illustrators. So this was an organic development for them. They didn't buy Illustrator, so it was an organic R&D, which is basically, obviously, for the people who don't know, it's vector-based editing software. They did acquire Photoshop, which is like more pixel-based editing software. It's still editing software, for creativity and all that, but it's pixel-based instead of vector-based. And they initially licensed Photoshop in, I think, 1989, but they eventually bought it outright in 1995 for only like $34.5 million. So, it was a home run for them. And It's not just like Photoshop or Illustrator. So they also had like early 90s, for example, Adobe Premiere. I mean, these are the three. And then 1993, I think it was PDF. So I mentioned like four products that everybody knows. Everybody, heard about it, or anyone who is in the creativity industry have heard about it or have probably used it already. So I was struck by that they on a very 4 or 5 year period, they came up with products or acquired products that we're still using today, like 40 years down the line. Like we probably can't talk about too much. Like we can't talk about too many software products out there that have maintained their durability or relevance for 40 plus years. So that was something that kind of struck me when I was studying the company for the first time, I think back in 2022. One other interesting fact that I came across when I was studying the history, that Adobe actually did not participate in the tech bubble. So I just assumed, like, if you asked me before, studying Adobe, like, what do you think Adobe grew during the tech bubble? It's 1997 to 2000, 1996 to 2002. And I would say probably, maybe 20, 30%, right? The actual answer is 7%. And one of the reasons is basically, just like as I was mentioning, the in the first decade or so, they're brimming with innovation. And then in the late 90s and early 2000s, they're kind of lagging behind compared to their peers, compared to the other players in the tech industry, because of their founders, because they did not really quite buy into the internet being revolutionary theme. So they were like, oh, this HTML stuff, they're so ugly. It's not design friendly. This is not what it is. There's got to be something better, right? And they kind of, held back the company a bit. And eventually the founders actually left from their operating role. They remained in the board for a long time after that. I think until 2016 or 17, something like that. So that was like the first 20 years or so. But eventually they came back. They did like more acquisitions. They bought Macromedia in late 2000s. And then they bought some more stuff. Like we can talk about it later. So yeah, so it's a company that has that definitely built enduring, timeless software in the very early phase, of its life, and then they bought like a bunch of a bunch of other companies to kind of flesh out their end-to-end solutions in the
Hmm.
creativity software industry. So that's basically how I would briefly summarize or describe Adobe's history. Obviously, now their businesses has evolved a bit, and I think we can probably talk about that, how their business is currently kind of set up.
Yeah. Do you recall when they started to acquire the marketing assets like
Yeah.
Marketo and
Yeah,
those?
so they actually started. I think it was 2008 or nine with Omniture, which was like one point. So it was not like a negligible acquisition back then. So that was like 1.8 billion in 2009. Yes, I just looked into it. Omniture, and then they acquired Magento and Marketo in the same year, in 2018. So they paid like 1.7 billion for Magento, and for Marketo they paid like 4.75 billion. So
Yeah.
those are also kind of sizable acquisitions. So almost like 6.5 billion in one single year, basically, for these two acquisitions. So like those are the three pillars. They also did like a bunch of other acquisitions for the experience segment, digital experience segment, which
Yeah.
I think is entirely built from ground up, like through acquisitions.
Got it. Yeah, no, that's great. I think, yeah, and so, today I think of the Adobe complex as at a high level consisting of two parts. So you've got the content generation arm, and that's where you have Creative Cloud and all the content editing and generation tools. And then you've got the marketing or the experience side. And that's where you take the creative and you do stuff with it, right?
Uh-huh.
You build websites, you run marketing campaigns, you run analytics on on that marketing. You put that content on Instagram, on your landing page, that kind of stuff. And so the Adobe complex, it has this end-to-end logic where, you make the creative and then you use that creative for marketing purposes and then you measure the results. And so those assets, they're grouped into three broad buckets. So you've got Creative Cloud, and that's, Photoshop, it's Illustrator, Premiere Pro. It's all the stuff that you were kind of talking about in the
Right.
historical overview. Then you've got the Document Cloud, and that's Acrobat, PDF, the e-sign services. And then you've got Digital Experience. That's the third one. And that's
Uh-huh.
the, enterprise marketing and analytics. And so the Creative Cloud, that's kind of the biggest portion of their ARR. That's about 62% of their ARR.
Uh-huh.
Then you've got Experience, so that's the marketing part. That's 22% of their ARR. And then you've got the Document Cloud, and that's 16%. And so that's how I think about segmentation by product. They
Uh-huh.
also recently disclosed segmentation by, customer persona. So you've
Right.
got I think this is the first time they disclosed this was at the
Yeah.
Adobe Summit, right? Okay, so they've
Yeah, I
got,
think so.
yeah, so they've got business professionals in one bucket, they've got marketing pros in a second, and creative pros in a third. So that's kind of a helpful disclosure when thinking about the risks and opportunities for AI, which we'll go into later. And I'll just go through these briefly. So creative pros, this is Adobe's bread and butter. These are the people who need their work to be pixel perfect. It's the graphic designers, it's the illustrators, the 3D artists, the photographers, and they're really looking for precision. So you think about product design and gaming, film, entertainment, publishing, that kind of stuff. Then you've got marketing professionals. So these are people who are, let's say, maybe a bit less precious about the creative process. For them,
Right.
content serves more of an instrumental purpose. And what they want is like a high volume of content. They want it fast. They want it delivered across all these different marketing channels. So, you think advertising, product marketing, it's that sort of stuff. And then you've got business professionals and consumers. That's the third bucket. So that would be, your run-of-the-mill business communications. It's PowerPoint presentations. It's pitch decks. You're making a short video for consumption on TikTok or whatever.
Right.
And it's the biggest TAM as far as like the number of users go, but
Uh-huh.
it's also very, very diffuse. And there's a ton of diverse use cases here. Unhelpfully, as far as revenue disclosure goes, they lump creative pros and marketing pros into like a single bucket.
Together. Yeah.
So,
Yeah.
those two personas combined account for 3/4 of Adobe's revenue. And then the remaining 25% comes from the business professionals and consumers. And so for each of those customer segments, Adobe has several products that best serve them. So for business pros, it's going to be Acrobat and Adobe Express. We know what Acrobat is.
Yeah.
Adobe Express, it's basically just a simple way to create content. It's templates, it's AI, text to image generation, it's drag and drop interfaces, that kind of stuff. It's what
It's like
Adobe.
is it the kind of Canva alternative for them?
Yes, that's how I think about it. It's
Yeah.
kind of what Adobe Spark used to be. So they had
Right.
launched this product,
I
Adobe
think
Spark, to
it's used
compete.
to be known as Adobe Spark. They changed
Yeah.
the name. Yeah. Okay.
They changed the name. They also claim to have just totally revamped the product. So that's not really built on the same
Right.
chassis, but right. And then, so, you've got like, let's say you've got a document in PDF. You can use Adobe Express to add colorful cover page or add images. You can create like an avatar of somebody speaking about your presentation, and the avatar will kind of narrate the presentation, basically. So it kind of competes a bit with like PowerPoint and Word, Microsoft PowerPoint and Word in a way.
Yeah.
And so, so for creative pros, it's the main assets to think about. It's obviously Creative Cloud, and then it's Firefly, which is their AI model and all the
Right.
services that are downstream from that. And so, you can take an image and type in. They gave some examples in the summit, like change the background from blue sky to a sky with a sunset. It can
Right.
turn that into a video. It can turn that into a social post. It can add text and graphics, and it can automate a bunch of like tedious tasks that the creators, they'd rather not waste time with. And so within that Creative Cloud suite, you can use the Firefly model, but you can also use other third-party models as well.
Yeah.
And then there are specific reasons why you might want to use the proprietary Firefly model, which we can go into later. And then for the third segment, the marketing pros, the big thing there, it's like Gen Studio. And so this is their end-to-end product that kind of brings together the Creative Cloud and the Marketing Cloud. It's an efficient way to generate the creatives and then get those creative assets to the destinations that you want them to be in.
Yeah, no, I think so there were like a couple of helpful disclosures that I saw in their kind of recent Adobe Summit, which I think happened probably last week or so. So it's pretty recent. So they did disclose their AI. So they basically defined it in two separate ways. One they said AI influenced ARR, and the other one was AI first direct ARR. So AI first direct ARR basically is the products that were launched like a year ago. Within the last like 12 to 15 months, the products was launched. The revenue started from zero to I think it's 125 million within like 5 quarters or so. But for AI influenced ARR, it's like, you already have, let's say, Creative Cloud Suite subscription, and you're using AI that the use case, let's say, didn't have before this Gen AI stuff came into the scene. So now you're using AI to use your Creative Cloud Suite products, different products, Photoshop, Illustrator, Lightroom, stuff like that. And that AI influenced ARR is right now $3.5 billion. So
that's about 15% of their current ARR, essentially. And I guess the way I thought about that is that's kind of the uplift that management thinks it gets by having AI weaved into its existing products. Because I guess they've got, like Firefly and Gen Studio. Those are like separate apps, but they're also like weaved into the existing product suite, right? That's how I interpreted it.
I mean, these are obviously, as these things go, Adobe has become sort of like controversial stock, right? And as stock becomes controversial, a lot of these things, data and whatever, like these things become almost like a Russia's taste, right? Bulls interpret things differently than bears, right? So people say, oh, AI is $125 million. That's like 1% of their revenue, right? It doesn't really move the needle. And Adobe management is basically saying, look, we had zero revenue. Like if there was a startup out there which had zero revenue like 5 quarters ago, and now it's like $125 million of ARR, you guys would not stop like, talking about it, right? So,
Right.
so yeah, like, you can probably, interpret it in either way. Uh, but yeah, I think, so that's one helpful, disclosure, that, how much AI is influencing revenue in terms of like direct AI revenue, AI influence revenue. It's just helpful to have, and I think
Yeah.
Adobe management has actually explicitly mentioned this. There are not a lot of companies out there who are actually disclosing their actual AI revenue. So because Adobe has become some sort of like, they are kind of dealing with a lot of controversy, a lot of debates. I think they are being forced in a way to kind of close more to kind of calm people down. And unless my guess is, unless if they were not under that pressure, they would also not probably talk about these things in such detail. The other disclosure that was helpful, was enterprise revenue. So
Hmm.
that was like $2.2 billion, I think, last year, which is like roughly, I think so. That's 2.2 billion
Within the Creative
Creative
Cloud. So
Cloud. So that's
yeah.
like
Yeah.
15%. Uh, if I'm being honest, I think, I was a bit underwhelmed. Like if you asked me to guess before they disclosed it, I think I would probably, guess slightly higher, than 15%.
Yeah, me too.
Yeah, my guess is it'll probably embolden the bears, that particular disclosure that, enterprise revenue are, you know, thought to be relatively more sticky. It's harder to change the workflow. You value the relationships and all that. And the consumers are more like finicky, right?
Right.
And the fact that it's only 15% of the Creative Cloud revenue, and obviously so much of the revenue is coming from like the creative pros, like, SMBs, and yeah, like, the jury is out there to what extent, those revenue buckets will be durable and growing. Right. So yeah, I think but I think that was helpful to have. That was helpful to realize that, this is a business. Like if you want to be, a shareholder, if you want to be bullish on Adobe, you have to believe that, the consumer bucket, can be protected and it will grow, right? If you don't believe that, if you think, oh, Adobe is this large behemoth in creativity software, they have enterprise relationship, they'll be fine. I don't think that's going to cut it. Like, enterprise stuff is just not big enough for you to feel immune if there is a sustained disruption in the consumer low end.
Right. And I think, even before we get into any of the AI stuff, it seems that Adobe, they just haven't done well kind of catering to the low end. They didn't really have a mobile or web native product until fairly recently. They didn't support real-time collaboration. They didn't really understand the commercial model where you open with a freemium tier and then you build your top of funnel and then you convert to paying subscribers. And so for casual creatives and marketers, and small businesses, Creative Cloud, I think the perception is it's historically been too expensive, too hard to use, too cumbersome. And then you had guys like Figma and Canva who exploited those weaknesses, right? And
Yeah.
now, yeah, I mean, they were just losing at the low end. They were losing low end market to those guys. It was just a damning indictment of how far they had fallen that they were willing to
Yeah.
pay, 20 billion for Figma. And then,
Right.
they
Right.
launched Adobe Spark for the low end in 2016. It wasn't competitive.
Yeah.
They replaced that. And so, yeah, I don't know. So my point is like, even prior to AI, Adobe was just struggling in the low end and the base rate of enterprise oriented businesses playing successfully down market is pretty low to start with. And,
Right. Right.
because I think at some point the cost structure and the incentives of
It's
an
really hard,
organization,
right? Like to be
yeah,
able to serve both ends of the market with like different needs and different sales motion, right? It's not
yeah.
easy. It's not
Because
easy. It's
usually
not
you start
natural.
low, you move
Yep.
high. That's how
Yep.
Salesforce did it. That's how HubSpot's now moving. Because at some point, yeah, you just have the cost structure incentives that don't support the reverse migration, right?
Yeah, no. So, I just want to talk, like, give people some idea about the like margin structure and all before we get into like more meaty, like bull bear case discussion. We kind of already started touching on those. But yeah, just to, give people some idea. I mean, Adobe is like it's been 40 plus years, since the company was founded. It's a scaled company. Margins kind of reflect that. Uh, but one of my inferences when I was studying Adobe was that I think most people may not appreciate how much dependent Adobe is on basically Creative Cloud. more like, their operating margin for the entire company is, I think, 40%. I think it went down a little. So if you adjust for like they paid $1 billion penalty for canceling the deal with Figma, right? So if you adjust that, I think their operating margin was 36%. Adjusting that, 36%. But my estimates is like this is an estimate. They don't disclose it. They do disclose gross margin for each of those buckets that you talked about. So digital media. So digital media is basically Creative Cloud and Document Cloud. We don't have the distinction of gross margins between Creative Cloud and Document Cloud, but digital media as a whole, they have 25% gross margin. And if you look at, let's say, DocuSign, which is a pretty good competitor, a pretty good comp for a Document Cloud. So DocuSign has like 80% gross margin. Creative Cloud probably has like 97% gross margin. Basically, it's all like there's it's a zero marginal cost, right? The perfect sort of example. But for the digital experience segment, they have 70% gross margin. And when I kind of, if you look at, so it's basically the comp that people talk about. I'm not skeptical to what extent it's like a good comp. But if you use Salesforce as a comp for digital experience, it's like 20% of the size of Salesforce, the revenue bucket of digital experience. So they both have like 75%, I think, 70% gross margin for digital experience. And when Salesforce was at like digital experiences revenue level, they were barely their GAAP operating margin was like flat or negative, right? So if you assume that, my estimate is like Creative Cloud itself is probably like, their margin is like 55%. And if you think that, then basically pretty much somewhere between 90 to 100% of their operating profit basically comes from Creative Cloud. In a way, it's basically, Creative Cloud is Adobe's Google search, right? People talk about it's probably more than that, at this point. So yeah, like, but digital experience, their margins have improved considerably over the last like couple of years. Gross margin, we don't know the operating margin, so gross margin is expanded by like 500 basis points. So things are kind of, trending in the right direction. Even Salesforce, for example, 3 years ago, they're like 5% GAAP operating margin or like break even. Now it's like 20%. Right. So the whole tech industry has kind of been focusing on improving margins over the last like couple of years. So I think Adobe, Salesforce, they're no exception. But I just wanted to highlight that particular point that even though we are talking about all these different subsegments, products and all that, ultimately this is a bet on Creative Cloud. To the extent digital experience, Document Cloud becomes much better businesses over time, that may give you some protection downside wise, but for a shareholder of Adobe to make, let's say, low double digit, mid teens type of IRR, you really are betting on Creative Cloud. There's just no other around it. So let's go into the kind of meaty part of the discussion, the bull bear case. I think I know. So just to start, just to make sure, so I don't own Adobe. I used to own Adobe, a couple of years ago. I sold it later. I can talk probably about that as well. But do you own Adobe?
I don't. No.
Okay. So just to give that disclosure, because I think it's possible. It's a good disclosure to have because we may be a bit negative, in a sense. So, but I think I do think there is a legitimate bull case as well, which I can talk about it a little bit.
So, because I thought. Yeah, I can see a bull and a bear case for this, honestly, because I thought when I watched the Adobe Summit, what I thought is when you think about Microsoft, Adobe, any of these companies where the value proposition is providing a wide canvas for creation or productivity, AI, it makes the boundaries between those companies blur. It's a great leveler of capabilities. And we see that in consumer space with these chat products. Like if you're a great writer, you can use ChatGPT for editing and whatnot, and maybe that takes you from a 7 to an 8, but it'll bring a terrible writer up from like a 2 to a 6.
For sure.
And the demonstrations during this investor day, it kind of made me both bullish and bearish about Adobe for the same reasons, right?
Right.
Like for the things that Adobe never did as well as Microsoft, Adobe AI kind of makes those things better. It closes the gap there. But likewise for creative generation capabilities that Adobe has always been the best at, AI has the potential to like, make Microsoft and Meta and whoever else
Right.
pretty good at that stuff as well, right? Maybe not as good, but it seems like it could close the gap um, to pretty to a pretty large degree. Um,
Yeah, so we were talking about Adobe before this call, and I think you had an interesting point about how ATT may actually be negative for Adobe. When I first like, and so you were kind of messaging me, and when I first read it, I was like, "What? ATT and Adobe? Like how those two are kind of connected?" And then you kind of explained it. I'm like, that's an interesting point. Like maybe there is a connection. Can you just expand on
yeah, it's
that?
a little bit of a right. It's kind of a galaxy brain take. I'm not even entirely sure I buy it, but my point was just basically, I feel like, and I'm just to be clear, I'm not super close to this company, so I'm talking out of my butt a little bit. But like to
Uh-huh.
me, Adobe has always struck me as a company that benefits from like fragmentation and online marketing channels
Right.
because they can put themselves out there as like the key point of integration between creative and marketing. So, you create and consolidate all your creative work in Adobe, and then from there you distribute across any number of channels. And to the extent that ATT solidifies the competitive positioning of, Facebook, YouTube, and various closed gardens,
Uh-huh.
and makes it impossible for anyone else to compete, then that consolidates more of the marketing spend on fewer online platforms. And now, generative AI allows advertisers to do the actual create the actual ads inside of Meta, right? And they
Right.
can do the
Right.
analytics inside of Meta. Nobody will have better analytics
Right.
on Meta's stuff than Meta, right? So yeah, so it's just, I think it's just important to think through or have a view on the downstream parts of the ecosystem as well,
Uh,
um, because that kind of ties back to the creative side, demand on the creative side. So yeah, that was kind of
no, I
the
think it's an
thought that
interesting
crossed my
point.
mind.
Like, yeah, I don't know, maybe it's far-fetched, maybe it's not, but I think uh, it is an interesting point that to the extent that these walled gardens have become more entrenched, right? And obviously monetization gets difficult in some, in other, less skilled apps or platforms, and money starts flowing more and more into Googles and Metas of the world. And yeah, to some extent, I almost think if you if people still need to use Adobe's platform or AI capabilities as much as they did like 3, 4 years ago, or even more, let's say, if in future years, then what exactly Meta and Google are investing in, right? They're investing
Mhm.
this, billions, like, 50, 75 billion dollars. Like obviously of that 75 billion dollars that Google is investing, a lot of this is for cloud, but they're also investing a lot in like, their, internal AI use, right? And obviously Meta
Yeah.
is spending a lot as well. I think helping their advertisers to develop creative assets, and to be able to tweak it, edit it, manage those assets in a coherent manner in like a single seamless way. That sounds to me it should be a core use case for a lot of this, AI investments that they are making.
Yeah.
And I think, I read this piece by Kevin Koch, I think who basically led Greylock's investment into Figma. And he wrote this kind of piece. I think it's titled "Why Figma Wins." And in one of the, like, at one point he mentioned, like, to him it's a bit of a surprise that large scale platforms such as Google, YouTube, and like let's say Meta, they never really focused on building that muscle for the other parts of the tools and softwares within their platform, right? And they kind of
Hmm.
left it for others to fill that void, right? And they did, a lot of, different companies kind of sprang up. But now that AI is in the scene, I think if you believe that these AI investments for Google and Meta have like compelling ROI, I guess that better includes the aspects of creative software, like editing tools. Like even, for example, Meta is coming up with this new app called Edits. TikTok has come up with CapCut, right? Maybe YouTube will come up with something else, right? So again, like I think this is kind of an eternal Red Queen's race of making things easier, more seamless, better. And AI just made all of these things easier
Right.
to pull off,
Exactly. Yeah.
right?
I think
Yeah.
there's always this question that you're asking where in the chain of tools that are being used to achieve a certain result, like where's the center of gravity? Where's the critical point of integration?
Right.
Like what is just a feature that should be woven into some bigger thing? The answer depends on the person, on the person using it. And there's so many different types of people and that supports such a wide variety of different
True.
software. So like, Salesforce, Microsoft, Oracle, they all do marketing automation in one form or another. But, Adobe is trying to differentiate by tying the content tools to the marketing further downstream, right? But like, if you're a husband and wife, small business, and you sell homemade jams or whatever,
Right.
and you're active on a few relevant socials, you're probably just going to use the Gen AI that's embedded within Instagram or Pinterest or whatever. And the marketing content just has to be good enough. It doesn't have to be pixel perfect. And then, a step up from that, if you're a startup with a few dozen people, you may just default to Canva or Figma or whatever content generation tools come embedded in HubSpot because you spend a lot more time in HubSpot.
Right.
And one of Adobe's value props, it's bringing together the marketing and the creative, unifying all the tools, creating the end-to-end process, doing away with the point products. But you can think about that and just say like, wait, isn't that what Meta is kind of becoming at this point, right? Because what is the disclosure? But some like significant percentage of advertisers on Meta are now using their
it's like
their
60, 70% or something like that. So
generative
it's a really
AI
high
tools.
number.
Yeah.
And to go back to your point about fragmentation, part of me thinks, even if, let's say, so you're saying fragmentation used to be positive for Adobe, and as things are becoming more consolidated, that's kind of a negative because these scale behemoths platforms are going to provide their internal tools. But also, if I imagine that there will be, let's say, a plethora of new apps, new platforms where people will spend more time on, and there will be more like advertising opportunities or more creators in like different platforms. Part of me thinks, even in that scenario of fragmentation, do people really need to use Adobe, or is it going to be just OpenAI API? Let's say Pinterest, or let's say Snapchat, or let's say XYZ new apps that's not yet launched or developed. They can't really afford to build everything ground up. And why do they need to do it when they have this kind of OpenAI's just an API call? And we can see how incredibly popular OpenAI's products features are versus, let's say, some of the other alternatives. And OpenAI has clearly kind of established itself as a better product company at this point compared to, let's say, some of the big tech AI products or features that they are launching. So to me, like, even if it is the case that there is further fragmentation down the line, 5-10 years down the line, I can envision a world or scenario where even in that scenario, it's not Adobe who is the biggest beneficiary. It's actually OpenAI becoming the biggest beneficiary for kind of such scenario.
Yeah. So I think there's 2 points there. I think one is Adobe would probably argue that there's no need to recreate the wheel. And that's why it's important to have a central hub, because you're reusing the same assets over and over again in all these different channels. Whereas if you were to if you were to not do that, you would have to create the asset in Meta, then create it again in YouTube, create it again in Pinterest or whatever. Yeah. Whereas it might be just easier to have like a centralized hub for all that stuff and just spread it out everywhere. I think the other point to make is, they distinguish their Firefly model by saying that it doesn't use copyrighted. It's not trained on copyrighted content, and it's brand safe, and it won't use the customer's proprietary assets to train. And so that I can see having major appeal to a large enterprise who wants to be super careful and diligent about that stuff. It also makes you wonder, though, whether or not they can't make the Firefly model available across all these different channels, whether or not it makes sense to go horizontal with it. Instead of having Firefly being captive to the Adobe complex, can Firefly be another model that you pick on some other ad
Can
distribution
I do that now?
platform.
Can
I
you?
don't know. I don't think
Okay.
so. I think Firefly is proprietary to them.
Proprietary. Yeah. Yeah.
Yeah, yeah. But
And
can
you're
they make it
saying,
available as like an
oh, okay.
API or something? Yeah. The same way, OpenAI does with theirs. Um,
So
and they can,
that would be a bull case, right? So if, for example, the
yeah,
courts decide that you can't use other people's work in your model development, and then basically in that world, in that scenario, Adobe's Firefly model is like way ahead of everyone else's, right? And they are already
yeah,
built a model. And in that case, as you were saying, if they can say, hey, you don't, as these companies have are rebuilding their models with like brand safe and content, right? In the meantime, you guys can use our API, right? I can
yeah.
see that. I can see that, that's a possibility. Yeah, that probably is part of the bull case for sure.
Yeah, and it seems like that seems to be one of the key things that they have going for them. One thing you often hear is that like incumbent advantages and data and context matter. But when it comes to AI, I'm not sure that's always the case. Like for ad targeting, it absolutely matters, right? And
Right.
that's why it's nearly impossible to replicate what Meta brings to bear. But I'm not sure that's necessarily true when it comes to like generative AI. Like it's definitely critical to training the generative AIs. But I'm not sure anyone has a commanding advantage here. I'm not sure why someone wouldn't just, create their first draft of an image in Midjourney or whatever, and then import that into Photoshop to make the fine-tuned edits, right? Like, yes, it's convenient to have all of that in one app, but doing the initial creation on another app is still like a viable alternative in a way that doing digital advertising on a social platform outside of Meta is not. Maybe that speaks to just the pricing power, how much pricing they might be able to exercise if those alternative approaches are
Yeah.
available.
Pricing power is something that I am, frankly speaking, confused about. I can make
Hmm.
the either argument. Part of me thinks, well, Adobe has so many compelling alternatives today, and frankly speaking, there's no new competitors coming up like almost every month these days.
Yeah.
So that makes me think their pricing power will be diminished, and actually they haven't really
Yeah.
used pricing as a lever. Like throughout 2010s, I would say most people would agree that Adobe has pricing power. But if you look at their actual pricing history, they did
Mhm.
not quite use pricing as a lever. So even in the last 4 years, I think the ARPU increased by 10%. Like not CAGR, like entire 4 year period, so 10%, which is like below inflation. And even like in before, like, obviously part of that, I think pricing trajectory gets masked by the fact that they moved from perpetual licensing to subscription model. And so they're kind of in that transition. So as they were in the transition, they probably were not really focused on raising price. They are more focused on making sure that people actually make the transition from a licensing model to subscription model. Now that transition is over, like 95, 96% of the revenue is basically from subscription. So now
Yeah.
I know maybe they would be willing to use pricing as a lever, but now they're in a position where now they're maybe thinking, can I really use pricing as a lever at this point, because we have so many other competitors, so many other kind of alternatives. So that's like one part of me
Yeah.
that thinks. And the other part is like, and I feel like, one of the pitfalls of subscription model is that you cannot really price discriminate. Right. So, and it is kind of relevant for even our business, right? Like, no matter who is reading our work, they're all paying the same. If you have $10,000 portfolio or like $1 billion portfolio, right? You're all paying the same, price for the
Mhm.
subscription. And obviously, like, Adobe had kind of solved that, in a way, because it's a seat-based pricing, right? And obviously they can do a much better job in kind of policing that than you and I can. But at the same time, I think, the fact that AI will be able to allow, I think, Adobe to price discriminate a little based on usage. So if you are
Yeah.
someone like, we all have, let's say, they're all of the customers will have, let's say, Creative Customer Suite, which is like $60 per month. But if you are using like, AI tools to create like a bunch of videos all day long, right? Then, previous world, like if you're like constantly using the Creative Cloud Suite to like to create all sorts of images, all sorts of like editing all sorts of like assets that you have, you're not paying more. right? Presumably, if you have a lot more work to perform, a lot more work to get done, you have more seats. But it's not really proportional, right? It has some sense of proportion, but not quite. But AI will definitely solve that problem. So they have, for example, if you see their pricing now, it's like if you pay for this plan, you get this much credit for generative AI using, right? So if you exceed that,
Interesting.
you
Yeah.
have to go to the next tier. And even if you like exceed that tier, the next tier, the user has some component to it now that they didn't have before. So in some sense, so if the volume of content creation that's increases massive, I think that is a safe bet. That next 5 to 10 years, the content creation will explode. Like that is not something that I think people debate about. So if that is the case, and Adobe maintains, obviously they have a incredible install base, right? They have an incredible distribution, and if they allow their existing customer base to use their products at a much more deeper level, at a much higher volume, and that higher volume can translate into revenue, not necessarily through raw pricing power, right? But just that, hey, you're using my product more, that's why you were paying. So it's easy to see the connection, why I'm paying more, right? So it's kind of easy to digest that sort of, versus, let's say, I think one of the challenges that all software or all zero marginal cost products have, like, whenever you raise price, people can be prone to interpret that you're just taking more from them, but your cost basically didn't increase. It's a zero marginal cost product, right?
Yeah.
But in the case of AI, that's not really the case. They can show, hey, you're using my product so much that you have to pay a bit more now to access, like, a higher volume tier, right? So if that's the case, like, it's just really hard to wrap my head around to what extent that will play out. But I can see that scenario that, the volume of content is just increases so much that it just allows Adobe to basically, generate more revenue. Not through necessarily raw pricing power, but through just, by the fact that they have the distribution and they're making sure that their customers, the current distribution, the current install base have what they need to kind of, do their job. And through that, they will be able to generate higher revenue.
Yeah. No, I kind of see it as a tale of two cities for now, where you're going to see a lot of pricing pressure at the low end. And I think you're already seeing that. And then pricing at the high end, that's a little bit more debatable. I think at the low end, the pressure would have happened anyway, even without AI, because they're just facing a ton of competition from Figma and Canva, and they needed to go freemium to be competitive. At the high end, though, for Creative Cloud, it's AI. It is for creative professionals, AI, it is meaningful improvement to productivity. And I think, Adobe, where are they most well placed? It's enterprises that are large enough to have like a dedicated creative function, because they're still the standard for creative pros. They have the most advanced tools. They have the most third-party plugins, the most widely accepted file formats, a huge support ecosystem around it. And like, if you've got a whole bunch of creative assets that need to be perfect and disseminated across lots of platforms, then I think Adobe is the default. Longer term, though, so like, people will sometimes say, well, you need somebody with good taste to pick the best images and videos and pick the things to edit. But I'm just not sure why that stuff can't be A/B tested to death, right? Like, I'm not talking about movies and TV shows where sometimes the best art isn't appreciated until later on, and there's pride in making good art for art's sake, regardless of public appeal. But I'm just more talking about the marketing function, marketing function, where the entire point is mass appeal or appealing to a particular audience. Like, if you make an ad that doesn't appeal to the audience you want, but it's an amazingly creative ad, then it's not a good ad. I don't care like how artistically amazing it is, right?
True.
Do you know what I'm saying?
Yeah.
Like, there's an instrumental purpose to the creative, right?
I totally agree. And I was, just before the call, I was just checking the Canva. So you were talking about low end and how that's facing competition even before AI came to the scene. So obviously Canva is a name that comes to the discussion for the low end part of the creativity software. And I was actually surprised that So I usually am very skeptical when I see a private company's revenue number or profit, like in like media, because who knows? But so this is something I saw on Canva's press release, so pretty reliable, I think. So their ARR is $2.5 billion in 2024. Uh, and I was checking in 2018, it was like $100 million. So within
Wow.
like 4 years, so 6 years, it went from 100 million to 2.5 billion, right?
Wow. Yeah.
That's significant. And
Yeah.
they did mention that this was like their seventh year of profitability, right? So they're
Hmm.
profitable, right? They're not like playing the Silicon Valley playbook of, generating
Yeah.
massive losses. So it's a profitable company growing super fast. So there's clearly a market for in the low end, which I think we can agree that Adobe has missed.
Yeah.
Adobe has ceded somewhat, if not to a large extent, to Canva. And they obviously have alternatives. They have some solutions, but it's definitely not really gaining traction to the level, let's say, Canva is already there.
Yeah. Yeah. And I think Canva, they're starting to move up market as well. I think
Yeah,
they've got an enterprise version of their product. So yeah, you can definitely see that being an issue down the line. I don't think that Canva, I think that Adobe's editing tools are still considered the best. I
yeah,
don't know that anyone is at their level there. So I still think at the high end of the market for like native pros, that kind of final mile matters.
yeah.
Like, and there's probably some pricing power there. I just don't know how sustainable that will be 5 to 10 years down the line. When you're talking about like a creative function that's being used for marketing
Yeah, no,
purposes,
no,
essentially.
totally, totally. And obviously, it's not just Canva, it's also Figma, right? So when
Yeah.
Adobe tried to acquire Figma for like 50 times, ARR, like a couple of years ago, so Figma did mention during the Adobe Figma call, in an M&A call, like, so they mentioned two-thirds of their users are not designers, which means one
Yeah.
third of their users are designers, right?
Yeah.
That's a decent foothold.
Yeah.
So you have
Yeah.
one third designers already in your platform, and it's already. I think it's been less than 10 years since Figma is around. So over time, fast forward another 5, 10 years, maybe that 33% becomes 60% in like 2030, 2034, 2035,
Yeah.
and we don't quite know what happens then. Like who has the bigger pool for that incremental like dollar, right?
Yeah.
I was just checking uh, how these companies just describe themselves when you just Google them. So Figma. So when I just Googled each of these companies' name, like just Google them and just see like how they kind of describe their company. So Figma is collaborative interface design tool, right? Collaborative, like that's like their main theme. And it's very interesting that when you look at Figma's pricing, they have a very interesting pricing. So one of their pricing tiers, which is called professional, and I think this is the low end. This is not the high end.
Hmm.
So they have a collab seat. Collab seat is basically $3 per month. Dev seat is $12 per month, and full seat is $16 per month. So it's really embedded. Even the pricing, it acknowledges that design is not just for designers. It requires collaboration from non-designers. It requires feedback from non-designers, and that's why they have that sort of lower priced seats, right? Uh,
Yeah.
I think the pricing. I thought that was kind of revelatory in terms of how they think about design.
Yeah.
So in some sense, they are massively expanding the market. So two-thirds of their users are not like non-designers, right? So they're massively expanding the market that Adobe did not have access to. And once Figma captures those kind of non-design markets, then, like I said, it's kind of an open question to me, who will have a higher right for that incremental dollar. So
Right.
that's Figma. Canva describes itself visual suite for everyone. right? So the focus everyone is, so I think kind of makes it clear that they are a major player for like for the low end of the segment. I looked at Runway, so which is more of a startup. We don't know much about the revenue now. So Runway describes itself tools for human imagination, right? So more broad, a bit vague, but more expansive in nature. And I think they're more video focused, right? So, I mean, Adobe is more dull, probably emblematic of a 40 plus years company, year company. So it basically describes itself creative marketing and document management solutions. So so anyway, so I thought it's kind of interesting that it definitely feels that these companies, all of them, are playing in the same field. It's a wide surface, and each of them are like in different surface areas of the wide surface. I just think like in 5 to 10 years, they are all going to try to expand their surface wherever they are today. They're going to expand it, right? And it becomes hazy to me a bit. What happens then? And for example, I was kind of updating my model for Adobe, and one thing that I kind of came away with was so let me just give you some concrete idea about the numbers. So if you look at that's the last 3 years of their total revenue. So in 2022, Adobe added $1.8 billion incremental revenue. In 2023, they added another 1.8 billion. So same 1.8. In 2024, they added 2.1 billion. So they have been around this 1.8, 2.1 billion for the last, I think, 6-7 years, right? With one exception, 2021, which was like 2.9 billion. But obviously that was kind of an anomalous year. All the companies that I look at, especially if it's a tech company, that year is like an extreme anomaly, right? We should not probably anchor to that number. But apart from, if you exclude that, it's mostly like around 1.8 to 2.1 billion. That's how much they have added incremental revenue. Now, if you assume that their incremental revenue is going to be around that, let's say 2.1 billion for the next, let's say 6 years, right? In each year, 2.1 billion, roughly speaking. If you assume that, I think you are basically implying that it's business as usual. This AI stuff, it's not really a competitive threat for Adobe. Yeah, they haven't been able to be a huge beneficiary. Then we would probably see an acceleration of incremental revenue. But we are not assuming that. We're just saying the way they have grown in the last 6-7 years, they're going to be able to add that incremental revenue in the next 6 years. If you assume that, then if you say, okay, the company is getting bigger, there will be some scale benefits, some operating leverage. So let's say they, like I said, adjusted for Figma acquisition fee, their operating margin was 36% in 2024. And let's say you assume 40% margin in 2030, right? So if you assume 2.1 billion incremental revenue for each of the next 6 years, you end up with $34 billion of revenue in 2030. So 40% of that is operating margin, which is let's see, 13.5 billion of operating profit. You pay 20%, let's say, tax. You have 11 billion, let's say, roughly speaking, of net profit, right? Math is basically you still need to have 25 times terminal PE to get to 10% IRR, right? And I'm assuming all the free cash flow is going to be used for buybacks, so I'm not ignoring that. So, and why would you be willing to pay 25 times if you assume that Adobe is positioned fine for the next 10 years, right? For the next 5-10 years from 2030. This AI stuff, all that's like, these are not big deals, right? These things will be kind of, are not disruptive in a major way. They seeded some share, new and upcoming companies came up, they took away some revenue that were incremental to the industry, but Adobe probably didn't get its fair share. But Adobe is positioned fine. So this is the scenario So that's basically the math, right? Now, obviously, like a lot of people talk about Adobe is down a lot, like 30-40% or something like that. The reality is you still have to assume it's business as usual. It's not like,
Right.
people will say, oh, markets too short-term oriented, like just because they missed this quarter or guidance by only a few points, the stock is going down, like there's no tomorrow. But when you actually run the numbers, I don't really quite share that. I think one of the reasons, and I wanted to highlight this point, a lot of people I have noticed, not just Adobe, for almost all software companies, this is true. And I will admit I was one of them. And I corrected myself, but I think a lot of people did not, which is people look at their NTM, next 12-month multiple on Coifin, on Ticker, on Bloomberg, on FactSet, on S&P Cap IQ, and they look at Adobe. For example, Adobe, I think, shows it's like 18 times, or maybe actually lower than that. Something I forgot, some low number. And the actual number is like 4 times higher. Why is that? Because it's non-GAAP EBIT. It's a non-GAAP EPS, which adds back the stock-based compensation, right? And just to give you perspective, so stock-based compensation for Adobe was $1 billion in 2021, right? This year, in 2025, it's going to be $2 billion. So it's doubled. Did their operating profit doubled? No. Their operating profit is like, obviously we have to adjust 5.7 billion to, if you adjust for the Figma acquisition, it's like 5.7 to 7.9. So it increased by 2 billion, right? So the operating profit increased by 2 billion and the SBC increased by 1 billion, right? It's a significant number that if you keep ignoring it, it's definitely going to be expensive at some point, because people like me, when I'm looking at this company, like, okay, this company looks cheap. So I update my model. I try to come up with, okay, what do I need to believe? And I see I still need to believe pretty business as usual. This company has not been penalized in a major way that people like to pretend, basically.
Yeah, no, I mean, no, it's a great point. It's something I kind of noticed when I was looking at. So I wrote up cadence and synopsis 5 years ago, and I think I'm going to do an update in a month or so. And yeah, I was seeing people quoting the price to next 12 months EPS on synopsis as being whatever, high 20s or 30 times. But that EPS number, it backs out a huge amount of stock-based comp.
Right.
And I think the adjusted EPS number, like a third of that is essentially like stock-based comp, something ridiculous. So you really, it's really not something you can just ignore.
Say, I know if a lot of people who, let's say if they listen to it, they will say, oh, we don't care about we don't look at non-GAAP EBIT. We look at free cash flow per share. But that free cash flow, obviously, you're adding back those SBC, and you're also giving a lot of benefit for the net working capital, because a lot of this is like deferred revenue. But if you assume the growth slows from 10% to, let's say, 5, 6, 7%, like that net working capital benefit also really shrinks. And if it stops growing, it can evaporate completely.
As a rule of thumb, like if you're putting a multiple on earnings, those earnings need to back out stock-based comp.
Exactly.
That's just how it goes.
Even if you are looking at free cash flow per share, it still really doesn't capture the full implication, right? So anyways, I just wanted to. I think it's a very common. Like, I can guarantee you, if you tweet about Adobe, someone is going to come and mention how it's trading at this cheap NTM multiple. In fact, I have this rule of thumb. Anytime you see someone on Twitter mentioning NTM multiples, you can just assume it's wrong. You can just assume that it's wrong. They're doing some finicky stuff. It's not because that's been kind of my, sometimes people say, oh, this company is trading at, oh, I was like, okay, that's interesting. This company has come down a lot. Let me, take a look and probably spend some time on studying that company. And then I realized, oh, no, not really, because they have, gone with some embellished version of the multiple, right? And if you just adjust for all those, then those things can disappear. It doesn't look as expensive, cheap.
People kind of, I think, in a vague way, understand this point. But the question is like, are we trying to get to the truth of the matter here, or are we just playing this self-contained game of estimates and we're using non-GAAP numbers because that's what everyone else is using? It feels to me that like when people are quoting these figures that back out huge amounts of stock-based comp, they must know to some extent that it isn't really reflecting earnings power. It isn't really reflective of, reality. But it's like, this is the game we've chosen.
Yeah.
Everyone, and the sell side's doing it. And so the
No,
buy
I
side's
mean,
gonna
if
do
you are
it. So
aware that, if you have consciously chosen to play a certain game, to me, that's totally fine. If you are unaware, that's the problem. Right?
Yeah.
That's when I think the problem begins. If you don't know, if you get excited by thinking that Adobe or some other software company is trading at some this cheap multiple, and then you buy that stock, and it turns out it wasn't that cheap because they have this is funny. I feel like becoming a software CFO must be a very lucrative job because I can just be a software CFO and increase the free cash flow margin, operating margin massively just by paying SBC because nobody really looks at that. So it's fine, right? So, and I can go into the earnings call and I can brag that our business has 40% free cash flow margin. A lot of software companies do that. And I look at that actual earnings power, and it's not there. Right?
Yeah.
It's funny. So it's an easy game to play. In fact, if you look at Adobe's incentives, management incentives, I think their annual incentives, if I'm not mistaken, a part of it is basically tied to non-GAAP operating income. And isn't it great? Like if you can just say, hey guys, we have this number to hit. Let's give ourselves less cash and more stock to help us hit that number, right? I'm not saying Adobe is playing that game, but I would be surprised if there are not companies out there who are actually trying to do that, right? They're giving themselves some fake non-GAAP target for their incentives, and it's not that hard to hit because you can just pay yourself less cash and more stock, right? And then that comp disappears, right?
If you're a 40-year-old software company, like let's knock it off. I mean, kind of understand, like if you are if you're a startup and your whole life as a startup was managing for cash flow, like your cash burn, right? Then you may think of stock-based compensation more as like a stock offering. You probably don't kind of mentally think of stock-based comp as an expense.
Absolutely.
In that phase of life. And maybe that carries over when you move into the public markets. But yeah, I don't know. For these mature like Salesforce at this point, and for Adobe and for Synopsys and Cadence, like let's be real here.
Yeah, you didn't mention the worst offender, Autodesk.
Autodesk, of course.
Yes,
of course.
At least Adobe actually does post 40% GAAP operating margin.
Yeah, true.
Let's give credit where it's due. Autodesk, its peer, basically was founded in the same year or maybe around the same year. It's posting like low 20s GAAP operating margin, right? They have the same gross margin, right? But they're
90% gross. Yeah, if you're doing 90% gross margins, you've got to be doing better. You got to be doing better than that. Yeah.
Right. Exactly. So, but yeah, like we were kind of talking about Adobe's bull case, there is a bull case that if you think that AI actually unlocks some of the pricing power through higher usage, right? And also obviously, if content creation just, it's a Jevons paradox, right? Basically, it's just everywhere, right? So if that's the case, maybe you don't have you end up attracting such a wide audience, and if you can capture a certain incremental share, things turn out to find maybe a bull, an Adobe bull might, I guess, legitimately say you are saying that they added $2 billion incremental revenue for each year in the last like 6, 7 years. And we have this AI revolution, AI, like, creativity boom. And you are still expecting them to do like just 2 billion incremental revenue. That's too conservative, right? Yeah, maybe there's truth to that, but that's basically the bet, that you'll have to assume, that, they do better than $2 billion incremental revenue. And the thing is,
Yeah.
people look so much on, pay attention so much on like percentage growth, but obviously $2 billion, let's say, yeah, like, in 2019, $2.1 billion was basically 24% growth, right? Uh, but if they do like $2 billion incremental revenue in like 2030, it's like 6%. Right?
Right.
So the base becomes larger. So if your incremental revenue doesn't like grow over time, then this percentage, and people say, oh, it's too low. 6% is too low for Adobe. But the thing is, the incremental revenue growth is actually kind of at this level for a long time now. So have to assume that AI will infuse an reacceleration of incremental revenue growth, right? And that's not easy. That's not easy for most companies. Maybe Adobe will be different. We'll see, but it's not easy, and that's why, like, this percentage growth is just so much hard to sustain over decades.
Yeah, I think part of what makes this exercise hard for me is that um, is I don't there's not good enough disclosure on like which parts of their revenue come from like the true creative professionals, the business and consumer side, that 25% of their revenue. That to me kind of seems up for grabs. I don't know. They don't seem to have that strong of a position there. There's lots of competition. And then outside of that, the other three quarters that blends in like the marketing professionals and the creatives. Yeah, I can kind of buy into this idea that there is a segment of like hardcore creative professionals and enterprises who hire them who need everything to be perfect and brand safe and all of that. Like, how big is what is that number?
I have nothing to add. I just think we probably should have named our podcast. I don't know.
Yeah, that's every podcast we do.
That's every podcast.
We do.
Yeah. Right. Okay. Let's keep it at that. We'll come with a different episode next month. Hopefully, we'll know something by then.